Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Tuesday, February the 11th. The year's 2020. Let's talk trading. All you can do. I was going through my email earlier this morning, and the usual Forex ads and emails that I get, those long sales ads. So I was looking at this one, was talking about, yeah, drag this onto your screen and make, 500 pips or something. And of course, I get down to the bottom and they want $497. And I just kind of laughed. And then there was this, I was remembering that email about all the different trading myths and how they were setting the record straight. But then of course they went on to talk about a few of their own myths that they don't consider myths. But then I saw something where it talked about basically all you can do as a trader. And when you really boil it down, there's only one thing you can do as a trader. I mean, once you click that mouse, all you can do is make sure you don't lose more on that trade than what you're willing to lose. That's basically your job as a trader. And so you can do that by sitting there watching the screen, or you can go ahead and put your stop loss in. But that's pretty much all you can do. You can sit there and wait. And if there's an opportunity to take profit, you can take profit. But your main goal, your main function is just to make sure you don't lose more than what you're willing to lose per trade. And I know you guys are thinking, geez, Rumpled One, every day you go over this. But it's just so important. And somebody might be tuning in, the first time. So I want to make sure they know this. And if you've heard it for the 100th time, hopefully it's sunk in and you don't lose any more on a trade than you're willing to lose. But, all those people who are sending you emails and putting out videos, and they're all wanting you to believe that there's something more to it. I mean, I've been talking about horizontal lines for about 2 decades now. Literally 2 decades. I haven't changed. I haven't wavered. I haven't gone away from those things. You know, and it pretty much stands the test of time. And every now and then I get an email or a text or something from a trader who says, I've been following your stuff, and after 2 years or after 3 years or after a couple of months, it doesn't matter the time frame. He said it finally hit me. I finally get it. God, it's like, yeah, all that other stuff is just a bunch of hooey. Because I don't care how many butterfly triangles you put on the chart, price is either going to go up or down. It's not going to do some triangle. I mean, some of that stuff is just so out there. And the waves, and then the waves within the waves, and the blah blah blah. I mean, it's just crazy. So I mean, really, all you can do is make sure you don't lose any more in any particular trade. The rest is out of your control. I mean, either the market gives you an opportunity to take profit or it doesn't. You can't control that. But you can control how much you're going to lose. And that's the trick. That's it. But, you don't people don't get to sell you indicators for hundreds or systems for thousands, or get you to go to seminars for something that simple. You're not going to go for it. That's not the way you're wired as a human. They know how to push those buttons to get you to part with your money to buy their system or something. But you don't have to fall for it. You don't have to go after that shiny new object. You can just stick with the basics. So, fellow traders, as I've mentioned before, these videos are for educational purposes only, and your results may differ from mine. Oh, now I'm going to sound like one of those guys at those commercials that, they speed up the talk just at the end. But, trading is risky. And because trading's risky, if you're seeking trading advice or financial advice or investment advice, you need to seek it from an accredited financial professional, one of those people that have a certificate on the wall that says they're an accredited financial professional. So when you take their advice and you lose money, you know you got that advice from an accredited financial professional rather than some guy with a funny name putting out YouTube videos, right? Or posting on blogs or trading forums or emails or Twitter or Reddit or Pinterest or whatever. I mean, I saw somebody said, "Hey, do you have a Pinterest account?" It's like, yeah, but why do I put some stuff out on Pinterest, but just but I mean, it's like, who cares about that stuff, really? you know, it's so funny, but okay, let's get down to it. The nuts and bolts. The weekly gap all fill. Remember last week some didn't fill, so hey, it made up for that this week, right? And you look at the trade here, you can see price had gotten to the upper wick zone of the previous week's candle but didn't break it. Right now we're 6 pips above the weekly open. Not exciting, right? Only 24 pip range on the day. We're 102 pips above the yearly open here. And you can see here, price is like just about ready to get into all these wicks over here, but it quite hasn't hit the previous day's midpoint right there. Here, the weekly. Yesterday, the opening range for the week was here. As you can see, price spiked above it, but it's now below it. So 22 pips off of that high, 13 pips off of yesterday's high. So you could have probably picked up what? 9 pips, 8 or 9 pips there. Remember, in these small ranges here, 8 or 9 pips, that's almost 50% of the range. So it's nothing to sneeze at. We're right back in that weekly buy zone. You can see that here. So that, there's some opportunities to take some pips, not many, but some. Now we're in the inside bar here of yesterday. Yesterday was an inside bar. Once again, it had broken out. So we're back in that range. So yesterday's candle was an inside bar candle, and it also was the opening range for the week. So you're going to see the same thing on a couple charts. And you can see here we've got a few inside bars happening on the daily, and dollar yen being one of them. Only 2 pairs over 100. I mean, look, the new beast is only 82 pips. Range is just dried up. So you really have to get in there, get in and take what you can. I mean, really, some guys talking about 500 pips? What pair? I mean, about only one pair, and that's the beast, or the new beast that could produce those. You can see here we had a weekly highest open right here, which is H1 highest open, that is. You can see here you had an opportunity to get back in short at the 109.90 level. Once again, simple horizontal lines. And right now we're putting in a lowest open. You can see 3 pips off of the bottom. But no rat trades, not enough. We took out the pivot here, taking out again. Rat zone here, looking at the new beast. You can see it just put in a new high. Coming off of that high again. There was pips to be made. On the pivot, we're still looking at that weekly pivot of 109.36 for a short target. Don't know if we'll hit it this week or not. Daily pivot taken out. Okay, price action people. We've got the 3 level ZZ with the balls, but as I mentioned before, price closes between these two lines. It's not staying between those two lines, or it opens between these two lines. It's not going to stay between these two lines. We opened between the 70 and the 80. We popped out. Here we got a close between the 80 and 90. We popped out. We got a close between the 90 and the double O or triple O, however you want to say it. And we went out again. So it's real simple. Sometimes it might take you a few hours. Sometimes it might take you less than an hour. Price is not staying between those two lines. It's just not. In and out of the wick zone, we can see that right here. And so if you think about it, these systems are nothing more of putting a bracket around the price, and price is gonna leave that bracket. It doesn't matter. That's what's going to happen. It's going to leave it. It's just a matter of when. Einstein line, the same thing. We started looking at price here, and we put the bracket, and you can see how price exited. Sometimes you can get 1 or 2 pips. Sometimes you can get a bunch. But the fact of the matter is, price moves, price ranges. It's going to break out of these narrow brackets. Okay, as you can see here, we dropped, about 4 or 5 pips at the tick level here. Now, you can see there's just not much movement happening here. Looking at the ATR, once again, let's move it in here. We've got Monday, Tuesday. We hit that minimum ATR, or the open plus half of the minimum ATR here, ATR2 in this case. And you can see it's reversed off of that level a couple of times. I'm showing you this stuff each and every day. It's up to you to, to use it or ignore it. Weekly range, only 40 pips so far, average 125. And these are the daily ATR zones, and you can see the weeklies in blue, and we are nowhere near those weeklies, not even the halfway point. Still 3 days left in the week. Let's see what happens. Made a higher high on the day here, so we broke out. Oh, let's see. And you can see there's a lot of breakouts here. Let's see. Is there anybody? Yeah, I think every last pair has done a breakout of some sort. Looking here at the highs and lows that we could call them virgin because they haven't been penetrated. They haven't been crisscrossed. So right now between 78 and 72, price is going to break out. It's going to get through one or the other. It's just a matter of when, right? So, fellow traders, that's about it for the day. So all you can do is make sure you don't lose any more in any particular trade than you're willing to lose. If you do that, you're probably more than halfway there. Because the method, it doesn't matter what you're trading. As I always say, it's not what you trade, it's how you trade it. So go out there and drain the banks. And if you haven't, come down here and hit the subscribe button, click on the bell, click on like, so maybe YouTube will show my videos to more traders out there. Share this all over. Send it to fellow traders via email, post it on different forums, and just spread the word. So, TheRumpledOne signing out.